The opinions expressed by Karen Scott Mims and the guests on this podcast are their own and do not reflect the opinions of this podcast platform. All statements and opinions expressed are based upon information that's considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Investments involve risks and, unless otherwise stated, are not guaranteed. Past performance cannot be used as an indicator to determine future results. Any strategies mentioned may not be suitable for everyone. Information expressed does not take into account your specific situation or objectives and is not intended as a recommendation appropriate for you. Before acting on any information mentioned, please consult with a qualified tax or investment advisor whom you have specifically retained to determine if it's suitable for your specific situation. This podcast is designed to provide accurate and authoritative information with regard to the subjects covered. Investment advisory services are offered through Brookstone Capital Management, LLC, a registered investment advisor. BCM and Harbor Point Wealth Management are independent of each other. Insurance products and services are not offered through BCM, but are offered and sold through individually licensed and appointed agents. Income regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. Insurance products and services are not offered through BCM, but are offered and sold through individually licensed and appointed agents. Income regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance products and guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone Capital Management. Most people simply ignore taxation through the 4 phases of your wealth. Instead of understanding the 3 tax buckets, you arrive at retirement with a huge 401k in the tax-deferred bucket and ignore the taxable and, most importantly, the tax-free bucket. How can the middle-class millionaire, average Joe and Jane, be so unprepared about how to protect their wealth using tax loopholes like the wealthy 1%ers do? Easy. Welcome to the Tax Smart, Tax Zero podcast. This is a show about tax-free wealth. Financial advisors sell rate of return. Annuity salesmen sell what else? Annuities. And part-time tax preparers sell a 1040 to submit on April 15th. But the real goal is to implement strategic tax planning. We invite you to take the journey and explore the path to the 0% tax bracket. It's time to divorce Uncle Sam from your wealth. And now, your host, noted tax attorney and private wealth strategist, Karen Scott Mims, Esquire.
Well, you have joined us for another episode of Tax Smart, Tax Zero, the path to the 0% tax bracket. And our show for today is entitled Privilege, yet another attack on your 401k. I think it's a topic that for sure we need to understand. So I'll start by saying that I've been having some interesting conversations, needless to say, as I shelter in place, as we all do, due to COVID-19, more commonly known as the coronavirus. And so one of the more interesting conversations I had was actually with a 3rd grader about the topic of privilege. So of course, he wanted to know, what is it? Do we have it? Why don't we have it? How do we get it? And what happens to us if we don't have it? What happens to people in general when they don't have it? So I thought those are really good questions. Those are all very valid questions. And I thought I would go about answering it by using the method that my 3rd grade teacher used to use on me. So each week, she would give us a list of 20 words on Monday. And by Friday, we actually had to not only be able to spell and pronounce those words, but we had to be able to use them in a sentence, and we had to be able to explain them by using them in the proper context. So I thought that what better way to do this by using that same methodology. So with that being said, let's have a brief background on wealth, right? Because privilege is really that level of wealth that comes with enormous benefits. And we'll talk about those in the second half of the show. So with wealth, we'll talk about the 4 stages of wealth, right? So we'll talk about wealth accumulation, wealth preservation, wealth distribution, and then wealth transfer. And so as we go through these 4 stages of wealth, we're trying to do something pretty particular, right? We're making some choices. We are making choices about how we're going to allocate the resources, i.e. the money, the wages that we receive as a result of our W-2 income, human capital, so to speak. So we're either going to allocate a portion to either spend or save. I think it's very simple. It comes down to those 2 categories. Are we going to spend and are we going to save? And if we're going to save, then how are we going to save? We have 3 tax buckets that we can save in. Certainly the taxable bucket, the tax-deferred bucket, and the tax-free bucket. The tax-deferred bucket is obviously the bucket that we save in which we have the IRS lien against those funds, and which we have the partnership with Uncle Sam. The tax-free bucket, very different. The tax-free bucket, of course, is going to be the bucket in which we have a 0% tax rate. I like to say that 0 is my hero. And of course, that 0 is my hero is the name of our tax study group. We'll talk about that a little later. But otherwise, let's just suffice to say that for now, you are running this company called My Wealth Incorporated. And so your function as the CEO of My Wealth Incorporated is twofold. Number one, you want to be profitable. That's very important. And then number two, you want to be able to make the best and most tax efficient decisions as you go through those 4 stages of wealth. In case you have just joined us, you of course are listening to another episode of Tax Smart Tax Zero, the path to the 0% tax bracket. I am your host, Karen Scott Mims, tax attorney, registered investment advisor representative, accountant, estate planner, and certainly my favorite role, private wealth and tax advisor. Again, our show for today is entitled Privilege, yet another attack on your 401k. So, hopefully, you understand that I am talking about hardworking average Joe and Jane. They are functioning again as the CEO of this company called My Wealth Incorporated, and they are trying to, number one, be profitable. Number two, also to make the best decisions and the most tax efficient decisions that they can make during these 4 stages of their wealth. Wealth accumulation, wealth preservation, wealth distribution, and wealth transfer. The problem is that their efforts are being thwarted. Their efforts are first being thwarted from the self-destructive habits that they have. That is a lack of expertise, a lack of education, and a lack of accountability. Because one of the things that I notice is that they seem to, despite the fact that they have neither the time, the skill, the will, or the expertise, they like to serve as do-it-yourselfers, even though that clearly doesn't produce the best results. And then the other thing that is thwarting their efforts in order to be the best CEO possible is that there's a little bit of man-made destruction, purposely and intentionally by their government. And so you might say, wait a minute, the federal government is supposed to be our friend. The federal government is supposed to be the agency and the entity that is for the people, by the people, on behalf of the people. Let's talk about that. Okay. So in running this company called My Wealth CEO, we're going to measure our level of success in running the company by 3 different measures. Number 1, by the balance sheet. So that's a pretty simple formula. It's assets minus liabilities equals our net worth. If you haven't seen one of those statements, then I would urge you to give us a call. The number is 866-621-6660, so we can prepare not only that statement, but the other 2 for you as well. So first, it's the balance sheet. The balance sheet, unfortunately, is sometimes flawed because the 401k that we list under the assets section, we refuse to list the corresponding tax lien or liability. Because after all, if you have a 401k, a 403b, or a TSP, or even an IRA, you're talking about having pre-tax money. It's never been taxed. And again, you have the partnership with the IRS. The tax lien does exist, whether or not you're going to put it on the balance sheet or not, okay? It's also sometimes flawed because the largest items that you have listed are ones that you can't so easily access, right? So, you see those break glass in case of emergency. Well, this is not one of those assets, right? The 401k, 403b, 457 TSP, nope, not one of those assets, okay? So you've got that as the largest asset on the balance sheet. And then also you've got the primary residence. Again, not an asset that you can easily just break glass in case of emergency and take all the equity that you have in there, right? So we've got the balance sheet, which sometimes, by the way, has everything included in past years, okay? Then we have the income statement. That's going to deal with how much did we take in and how much did we pay out for this current period, the current year, so to speak, right? And then this third statement that we have is the statement of cash flows, and that's kind of asking the same question or a similar question, we'll say, to the income statement, but is asking how and when does that money actually come in and when exactly does it go out? I am your host, Karen Scott Mims. We have yet another episode of Tax Smart, Tax Zero, the path to the 0% tax bracket. And in particular, our show today is entitled Privilege, yet another attack on your 401k. So kind of interesting. So there are some issues, though, that arise in running this company, and there are various types of risk. So number one, there's definitely stock market risk. That is the risk that you open the envelope and the 401k is now a 201k. There is certainly inflation risk. The number on the statement is real. It's just that it only buys 1/4 of what it did 20 years ago. There's interest rate risk, right? You can't find a bank that's going to pay you greater than 2% for your deposit, yet inflation is rising by 3%. And oh, by the way, if you go take out a loan without perfect credit, then it's going to cost you 8 or 9%, right? But I would say to you that the biggest risk that we need to be aware of is legislative risk. So we understand that we have 3 branches of government: executive, judicial, and legislative. But now they all seem to be controlled by a regime of cabinet appointees and others who use this 5-point system. Number 1, are you a friend of 45? Number 2, are you an out of touch with reality billionaire? Number 3, do you lack any expertise whatsoever for the agency over which you preside? Number 4, are you completely committed to ignoring and penalizing the average hardworking Joe and Jane? And number 5, will you uphold the oath, party over people and politics over pandemic? I am your host, Karen Scott Mims. I am so glad that you have joined us for another episode of Tax Smart, Tax Zero, the path to the 0% tax bracket. Our show for today is entitled Privilege, yet another attack on your 401k. So we talk about this idea of tax legislation. What do we mean by that? So normally we have major tax legislation every 15 or 20 years. We have, in case you don't know, we have had 3 major acts in less than a 3-year period. So here are a couple of facts that I want you to think about. So fact number 1, the global pandemic is affecting Wall Street in a way that is causing and wreaking havoc on your 401k. Number 2, if you do nothing, it will bankrupt your 401k and the middle class lifestyle that you had planned for yourself for those 30 to 40 years that you'll spend in retirement. Number 3, the war being waged by the wealthy 1%ers against the hardworking Joe and Jane had already begun, okay? It's just a matter of it getting worse. Fact number 4, we have seen firsthand the result of not taking a threat seriously and the horror that emerges from delay. Number 5, early in February 2020, 45 called what we now fully recognize as a global pandemic a, quote, democratic hoax, unquote. So we're going to talk about My Wealth Incorporated, right? And most importantly, we're going to talk about the nearly $4 trillion that threatens to destroy it. And in case you don't know about that recent $4 trillion on top of the existing debt that threatens to destroy it, I would encourage you to do a couple of things. Number 1, you can certainly give us a call. The number is 866-621-6660. Again, that number is 866-621-6660. I would say to you that you can't continue to ignore it. I would say this might be a good time to join us for our 4-week online course. It's entitled Tax and Wealth Optimization. I would say that this might be a great time to have a 30-minute virtual meeting in which you answer some very basic questions. Can I survive and am I on track? Number 3, I would say maybe we actually do a first draft of that tax-efficient retirement plan, because after all, a portfolio is not a plan. And number 4, maybe we just have you understand the benefits of being in the 0% tax bracket. So I am your host, Karen Scott Mims. So happy you've joined us for another episode of Tax Smart, Tax Zero, the path to the 0% tax bracket. Our show for today is entitled Privilege, yet another attack on your 401k. We've gotten through the first half of the show, but don't go anywhere. We'll be right back.
Of all the questions you get asked every day, this is one you shouldn't ignore. How much money in your 401k or IRA is actually yours? Not what its current value is, but how much of it will end up in your pockets, not the government's. Remember, you still might owe taxes on that money. And how about tax efficiency? Are you overpaying, or are you keeping every dollar you're entitled to? Look, I know it's confusing, it's complicated, and it definitely isn't fun. That's why Harbor Point Wealth Management works to help make sure you aren't paying more in taxes than your fair share. They have a complimentary report to help make sense of taxes and how they can impact your retirement. Get it today. It's your money. You deserve to know what's at stake. Don't do the IRS any favors. Get your complimentary tax report from Karen Scott Mims and Harbor Point Wealth Management today. Just text the word tax to 301-900-5758. That's the word tax. Text it to 301-900-5758. Investment advisory services offered through Brookstone Capital Management, LLC, a registered investment advisor. BCM and Harbor Point Wealth Management are independent of each other.
Welcome back to the Tax Smart Tax Zero podcast. And now, your host, noted tax attorney and private wealth strategist, Karen Scott Mims, Esquire.
So we're back for another episode, of course, of Tax Smart Tax Zero, the path to the 0% tax bracket. You know that our show for today is entitled Privilege, yet another attack on your 401k. And you know that in the second half of the show, we like to call it tax liabilities and loopholes. Now, I will stop for a minute and say that if it seems like I'm so passionate about this topic, it's because I know, I understand, and I appreciate when the average hardworking Joe and Jane get the opportunity they deserve to divorce Uncle Sam and to use the same strategies, quite frankly, as the wealthy 1%ers use in order to move themselves into the 0% tax bracket. So you've heard me talk about zero is my hero. It's the concept of a tax smart, tax zero approach, quite frankly. It's the name of our tax study group. But when I talk about zero is my hero, I'm talking about the zero that represents the tax when it comes to the 5 fingers of death. So when I say the 5 fingers of death, I am, of course, talking about income tax, capital gains tax, estate tax, excise tax, and inheritance tax. And of course, we have both the federal variety and the state variety. So I know we don't have a lot of time left, but I do want to talk about tax legislation, a topic that we talked about in the first half of the show. I don't know whether you understand why I am being so passionate and why I'm so up in arms right about now, but let me take the last few minutes that we have left to explain. So I said earlier that normally tax legislation happens about every 15 or 20 years. Of course, this is a time when we have had 3 major pieces of tax legislation in less than a 3-year period. And so let's try to dissect them so that you will understand what I'm talking about when I speak of this attack that is on the middle class, and in particular, the average hardworking middle class person. So you've heard by now of the Tax Cuts and Jobs Act of 2017. Basic premise is that it is a piece of legislation that was formed and enacted for the wealthy, the top wealthy 1%ers. It resulted in a loss of estate tax revenue that costs taxpayers, i.e. average hardworking middle class Americans, $1 trillion being added to the deficit. So the tax crumb, C-R-U-M-B, that came out of this was that it temporarily lowered the 7 tax brackets and it widened the brackets. The biggest thing that happened, though, for that corporate top wealthy 1%, whether corporate or as an individual, it lowered the corporate tax rate permanently to 15%, yet the 7 tax brackets that I just described for individuals, those are only good until 2025. Come 2026, you are back up to not only where you were before, you have to understand and believe that you are going to be up to a much higher bracket. What if we took the brackets that were in existence prior to the Tax Cuts and Jobs Act of 2017, and what if we inched them up to first 30% and then 50%? What does your tax-deferred money all of a sudden look like? And by the way, of course, that's the money that you had planned to have this fabulous lifestyle in retirement. You, of course, wanted to have a tax-free, stress-free, but no, scot-free retirement. And so what does it do to that when we end the Tax Cuts and Jobs Act of 2017 and 2025 and we go back up to those temporarily higher brackets? Think about that. Second piece of legislation. Let's talk about the Secure Act. So the Secure Act was effective January 1st, 2020. It eliminated the use of the Stretch IRA, a tax strategy quite frankly, that was starting to be used by some savvy middle-class people, but it eliminated the use of the stretch IRA, and that was, of course, a tax strategy utilized in the wealth transfer phase that allowed you to remove Uncle Sam's grips on the funds that were being passed on to your beneficiary. Now, the tax crumb that was thrown to the middle class was an adjustment of the RMDs, stating that now they don't start until age 72. Some people knew that, some people didn't know that. But my question becomes, is it enough for you to know it? Of course not. The question is, what are you going to do about it? The question becomes, what tax planning strategies are you going to implement to take those crumbs, i.e. your lemons, and make lemonade? What tax planning strategies do you now use to replicate the tax benefits that you used to be able to receive under the stretch IRA? Yet another reason to sit down and have that complimentary consultation, yet another reason to sit down and put together the first draft of the tax efficient retirement plan for you, and yet another reason to consider being on the path Tax Smart Tax Zero to the 0% tax bracket. If that's something you're interested in doing, of course, you can give us a call. The number is 866-621-6660. If it's easier to text and you want to participate in the 4-week online educational course for tax and wealth optimization, you can, of course, text the word tax, TAX, to 301-900-5758. So, in our last few minutes that we have left, I will say to you, by the way, the stretch IRA is not a type of IRA account. It is an advanced and sophisticated tax strategy that supports the notion that tax expertise and tax planning, yes, going beyond tax preparation and realizing that neither H&R Block, your part-time tax preparer, or you have the necessary level of expertise, neither the skill, the will, the time, or the tax expertise to stop playing that game of checkers and to start playing the game of chess that you need to master. So in our last few minutes, I will say to you, zero is my hero. When I talk about that, of course, I'm talking about eradicating the 5 fingers of death. We're talking about having you on the path to the 0% tax bracket. And what I mean by that is the 0% income tax bracket, the 0% capital gains bracket, the 0% estate tax bracket, the 0% excise tax bracket, and the 0% inheritance tax bracket. So in our last few minutes, let me talk to you about the CARES Act of 2020, because that's where the real damage is being held. The CARES Act of 2020 was effective March 27th, 2020. And as of now, we're on CARES 2. I suspect by the time this is all over, we're going to have like CARES 7 or something of that nature, right? So not going to go into all the provisions of the act. I will, though, focus your attention on the $350 billion with a B for small businesses. The tax crumb, of course, was the $1,200 stimulus check, but if and only if you had AGI of $75,000 if you were single, or $150,000 if you were using the status of married filing jointly for a couple. But doesn't matter. In these last few minutes, we're going to talk about the $350 billion for the small businesses. So it all started because average, hardworking Joe and Jane had decided they're going to go out and support some of the small businesses who maybe did not receive some of that $350 billion, right? You know, kind of the small businesses that were really hard hit by COVID-19. And so, do you think that we might use this time to say, well, let me school you on some of the businesses that actually did receive a part of the $350 billion? So I ask you, Ruth's Chris Steakhouse, they have 150 locations. They are valued at $250 million. They actually received $20 million. Shake Shack, they are a 1.6 with a B billion dollar entity. They received $10 million. Potbelly, with 400 locations and a value of $89 million, they actually received $10 million. Do you notice anything, right, kind of crazy? You might be wondering right about now how these multi-million dollar companies with substantial cash sitting on their balance sheet actually qualify. I would answer you with 3 different words. Access, a heck of a lobby, right, for the hotel and the restaurant industries, and number 3, privilege, right? And by the way, they only decided to return the funds when they were publicly shamed into doing so. I say to you that for the second round of funds, the SBA has added a provision that you have to qualify by saying that you don't have any other source of funds available to you. And so when I talked to you earlier about the whole idea of a balance sheet, an income statement, and a statement of cash flows, does that now make sense to you? When I talked about understanding why you needed to be concerned about the 0% tax bracket, why you needed to be breaking your neck, quite frankly, to get there? It's because if you can't see it before, you certainly see it now. There is a target on the back of middle-class Americans, especially those that have bothered to save and have the majority of their wealth in a qualified employer plan, such as a 401k, a 403b, a 457, or a TSP. It is literally all about eradicating the 5 fingers of death: 0% income tax, 0% capital gains tax, 0% estate tax, 0% excise tax, and 0% inheritance tax. The federal government is spending trillions of dollars to benefit the wealthy 1%ers. They do so at the expense of the average hardworking Joe or Jane. I say to you, if you fall into the category of the average hardworking Joe or Jane, you are age 55 or older, you acknowledge that this scenario is only going to get worse, and you are concerned about paying too much in taxes. Zero is my hero, the path to the 0% tax bracket. Why don't we sit down and talk about our Tax Smart Tax Zero approach? You can do so by giving us a call at 866-621-6660. Again, that number is 866-621-6660. If you feel that you'd like to attend our 4-week online course about tax and wealth optimization, I would say that you can easily get a hold of us to do so. You can text the word tax, TAX, to 301-900-5758. Maybe you just want a free report to evaluate your current tax scenario. Maybe it's time to have a first draft of the TERP, that is the Tax Efficient Retirement Plan. In any event, it's all about education, planning, advice, and strategy. Again, my name is Karen Scott Mims, tax attorney, registered investment advisor, representative, accountant, estate planner, and certainly my favorite role, private wealth and tax advisor. My number is 866-621-6660. If you are interested in the Tax Smart Tax Zero approach, if you're interested in being in the 0% tax bracket, give me a call. The number is 866-621-6660. Thank you so much for joining us today. And Barbara, if you've joined us, get back to work.
This concludes another episode of the Tax Smart Tax Zero podcast. Get ready to create tax-free wealth and start on the path to the 0% tax bracket. To receive your Tax Smart Tax Zero toolkit, you can reach us by telephone at 866-621-6660 or text the word TAX to 301-900-5758. Or send an email to tax@taxsmarttaxzero.com. Want to attend our virtual seminar, Guide to Tax Minimization, Estate Planning, and Passive Real Estate Income? Text the word seminar to 301-900-5758. Send an email to seminar@taxsmarttaxzero.com and we'll register you and also keep you updated of all future virtual seminar dates and times. Don't forget to visit taxsmarttaxzero.com and on our YouTube channel. There, you can like us and subscribe to learn more about our tax study group, Zero is My Hero, or attend our upcoming webinars. Follow us on Facebook. And as always, sign up for our monthly tax newsletter and divorce Uncle Sam as the primary beneficiary of your wealth. Join us next week for another episode of Tax Smart Tax Zero, the path to the 0% tax bracket.